For more on this, we're joined by Osama Rizvi in Lahore. He is an energy analyst and global market strategist at Primary Vision. Welcome back to the programme, Osama. Now, we often focus on the bigger picture, connecting geopolitics and macroeconomics. Now, with Brent crude up 6% so far this week, despite falling 2% just on Thursday, do you see this new $76 level as a solid new floor, or are markets failing to price in the true scale of the Strait of Hormuz disruptions?
Well, that's a very interesting question. And to be honest, many people are confused regarding what is going on in the oil markets. There are two basically ends to the oil markets. One is the paper market, one is the physical market. But even that, there is a product market and there is a crude oil market. So when we look at the crude oil markets, as you just said, the prices have normalized. Maybe this is not the floor. Maybe prices can go further down. It will depend upon the demand and the global macroeconomic picture. But on the product side, you're seeing the exact opposite. You're seeing shortages. The crack spreads, that is essentially the difference of what refiners are earning after producing oil products, that is touching its multi-year high levels at the moment, which means that refinery capacity is also down, plus there is a shortage of products. So there is a lot of things going on, and all of this hinges on the future of Hormuz. And I think we are all not very clear regarding what is going to happen, because skirmishes, once again, hostilities tend to start and then they end. So it's all uncertain at the moment.
And the US and Iran potentially resuming negotiations has given the market some breathing room. How realistic is a breakthrough here, and would a deal actually eliminate the geopolitical risk premium that we've been seeing?
Well, I personally think that this Hormuz chapter is now a permanent feature of both the global geopolitics and also the oil markets. It is not going to close anytime soon. Iranian route, the Omani route, the Persian Gulf Strait Authority, all of these fixtures, characteristics point towards the fact that Strait of Hormuz will continue to be a bone of contention between US and Iran. Hence, I think there will be some sort of geopolitical risk premium baked into the prices. And even if there is a deal, it will be tenuous, it will be fragile. We're not going to see, unfortunately, a resolution of who is going to control Strait of Hormuz.
Meanwhile, the European Commission has rolled out its 21st sanctions package against Russia, but we're hearing reports that Greek shipping companies have been legally reaping almost $4 billion transporting that oil. Do these sanctions actually work, in your opinion, or do they just reroute capital and supply?
Well, at this point in time, it has become pretty clear that these sanctions have had some impact on Russian oil revenues, but not to the extent that the Western countries wanted. If you look at the recent data from May, the crude oil export actually increased 1% year-on-year levels. However, there was a decline of about 50% in terms of the products coming out of Russia, but that was not due to the sanctions. That is due to the refinery capacity being struck by Ukrainian missiles. I mean, 1/3 of the Russian refining capacity is down at the moment. So in terms of the crude oil movement and oil revenue, there has been some sort of dent, but not to the extent that it would pose a significant risk to the country. So far, because of the dark fleet, because of the gray fleet, because of the changing energy world order, I think it just reroutes capital